Boom shakalaka, with a lot of bearish sentiment across the larger markets. Today's video, we're going to be talking about why Bitcoin is bullish in the long term, but bearish in the short term. You definitely want to stay tuned. What's up everyone, Randall here from Crypto Love. Today's video, we're taking a look at why Bitcoin is bullish for the long term, but bearish in the short term, particularly with what's going on in the global markets. Before we get into it, guys, make sure to like, subscribe, click the notification bell. Come join us over on Twitter at the Crypto Love. Push the like button. It helps out so gosh darn much. Now, the Fear and Greed Index at 28. Personally, I am surprised we are not in extreme fear territory yet, but we are holding at just regular fear. The low end of it, extreme fear, starts at 25. The overall market sideways from yesterday. Bitcoin just sitting right at $20,000 at $20,050. Ethereum at $14.94. BNB at $2.78. XRP 33 cents. Cardano 44 cents. Solana $31. And Dogecoin 6 cents. And if you want the top coins today based on artificial intelligence and machine learning, they would be Tribe, Chiliz, EOS, Cosmos Hub, and Huobi. But also take a look at the large allocation of stablecoins in the portfolio. There is a 1-week free trial to Token Metrics down in the description. And if we take a look at Bitcoin, basically Bitcoin has broken out of this bullish trend that we were in since the beginning of, or the middle of June. Now we are in a very steep downtrend, finding support at previous all-time highs of $20,000. If we were to break through there, guess what? We could be headed all the way down to this green line. Historically, the lowest moving average support level that Bitcoin has at the 280 weekly moving average right now around $18,500. And a lot of people suspect that Bitcoin price could go lower because the sentiment is quite negative. If we take a look at this right here, unprecedented surge in home buyer mortgage payments. This could cause a giant housing collapse in the US, where the average mortgage payment went from $1,750 to almost $2,500. That is a massive price bump, and a lot of people may not be able to afford their mortgages as they don't have better jobs. Not only that, but if we take a look at this, good morning from Germany, which is heading towards an electricity crisis. The 1 year ahead power prices skyrocket to almost €1,000 per megawatt hour. The electricity price has risen by 720% year to date. Such increases will bankrupt many energy intensive firms. A lot of companies in Europe are very, very scared, particularly with winter looming. It could cause massive problems. Not only that, if we take a look at the S&P 500, just formed a textbook head and shoulders pattern predicting the price could crash all the way down from $4,100 all the way down to $3,900. And we have Bitcoin quarterlies have gone into backwardation. 3-month futures basis has gone negative for the first time since June, back at the bottom, back down here. So we have a whole bunch of negative sentiment across the market with housing, with energy, with stocks, with Bitcoin. Well, what's going on? Right now, the highest discrepancy between portfolio allocations and surveyed sentiment. The sentiment is at record lows. That means people think the worst about what's going on right now, while at the same time, portfolio allocations still holding fairly well. More pain to come, or are the stocks in strong hands? This is kind of interesting because people think the worst, and yet they aren't getting rid of their stocks. Very, very interesting. If we take a look at this right here, profit margins not yet signaling recession. So we have people right now, very negative sentiment. We have news organizations for the past 2 years screaming recession, and yet if we take a look at profit margins, not yet signaling recession. As a matter of fact, aggregate U.S. corporate profits rose to 15.5% in Q2 of 2022, the strongest since the end of 1950. Businesses are doing the best they've done since 1950, post-World War II. That was historically the best time that businesses have ever done. And yet, there's a global narrative signaling recession. The economic surprise index beginning to reverse from extremely low levels as investors' perception of the economy is starting to take a turn for the better. This is bullish for the stock market. Historically, when we have reached these levels, it has led to a price increase previously if we take a look at this on the NDX. And we have a swift recovery in tech. Tech stocks in a bear market cycled to more than 90% to fewer than 50% of the total. Not the type of behavior seen in continued bear markets. So a lot of things are looking like, hey, whatever global narrative we have going on about recession, pandemic, bear markets, Well, it doesn't look right when we take a look at aggregate U.S. profits. It doesn't look right when we take a look at the economic surprise index. It doesn't look right when we look at recovery in tech stocks, because historically when we have bear markets in tech stocks, it's all the way up here, and right now where we are, all the way down here. Which brings us to something like this. If we take a look at Bitcoin, and we have to connect Bitcoin with everything else that's going on globally because it doesn't occur just by itself, even though some of us would like to. Well, we take a look at charts like this. Every time the super guppy turned red, which is this indicator of a bunch of lines right here, every time it turned red, the bottom for Bitcoin was already in. And Bitcoin experienced a relief rally at least to the upper super guppy bands, right now at $34,000. Not only that, but we have Bitcoin just repeating history where we have descending channel fake out configurations. We can see previous times in bear markets we had descending channel fake outs where the RSI changes direction just like it's doing right now, and we have many fake outs where it touches this bottom line, which it has done many times previously. Which brings us to this right here. And I think this is very, very important because we have to take a look at Bitcoin in context of other things. So right down here where he says, however, we must consider Bitcoin has never faced a true bear market coupled with recession and quantitative tightening. So based on everything that's going on right now, he summarizes bull long-term, bear short-term for Bitcoin. Now let's take a look at some of the charts that he is taking a look at. This is Kelly Kellum over on Twitter. So first thing, we have reserve risk. It suggests Bitcoin is in an asymmetric risk-reward buying opportunity. However, no one can time the exact bottom. Based on the geoeconomic climate, lack of demand, and where we are in the 4-year cycle, I think there's some pain in the markets left to come. So even though we are at historically low levels on the reserve risk, based on the geoeconomic climate, it could go lower. Now, if we take a look at the number of new entities, an initiation of bull momentum requires new demand. Currently, there's no new demand, only the strength of hodlers. Max pain may not have been yet. As we can see here, we have just going sideways. Historically, we have the new entities increasing as the price increases and the bottom goes up. Right now, just going sideways. Not only that, we take a look at this, the entity adjusted dormancy flow. Many on-chain data tools indicate Bitcoin is an absolute buy zone, leading to many people believe we may be at the bottom or near it. His bullish bias agrees, and mine does too, but we must consider Bitcoin has never faced a true bear market coupled with a recession and quantitative tightening. While he does believe we're in a great zone to dollar cost average, he just wants to encourage healthy risk management as we have no real data points to measure how low these on-chain metrics can go. Patience equals profits. So historically, entity-adjusted dormancy flow, we're lower than Bitcoin's ever been, but it may go lower based on recession, quantitative tightening, and a true bear market, which brings us to this one chart right here. Many on-chain signals are in the buy zone. However, we can't ignore the ones that haven't yet reached these lows, like the market cap to thermocap ratio. Historically, that reached bottoms when we were down here in this green area. As we can see right now, we have not yet reached that green area, so we may still have lower to go. Summary of this episode, very confusing times for everybody. Clearly, do what you need to do with your money, but who knows what's going to happen. So that's all for today's episode. If you did enjoy it, make sure to like, subscribe, click the notification bell. I will catch you guys later. Have a good one. Love you. Peace.
If you don't think Bitcoin's going to $1 million a coin and then $10 million a coin, you're already a loser.